Welcome everybody to another eye-opener. This is Market Wealth Daily's quick little video chats that we do with top traders, and we are very excited to have Keith Harwood here with us today and have a great crowd in the room with us. We're looking forward to a lot of good questions and some interaction here. So all you guys out there that are with us right now, keep us honest, call us out on stuff, ask your questions, throw it out there. This is a group. This is not just Keith and I babbling. Yeah, we want to hear from you. Keith, great to have you with us.
Thank
Watching
you.
a crazy market, man. Again, I feel like, we got so in the mode of these really strong trends, down, up, and now we're back into kind of a tight range where we're locked, waiting to see where it's going to break which way or the other. So great to have you here. I know this is something that you've seen
Absolutely.
before, and
Yeah.
interested in what your take is.
Yeah, absolutely. Here, let me go ahead and share my screen so that we can start off with just the broad market, since that seems to be most relevant to, that kind of approach that I'm taking right now. And as you mentioned, if you look at the S&P over the long haul here, these are the tight ranges that we generally saw back in December and January. It seems much tighter right now because of what we experienced in April more than anything, right? I mean, April was wild. And so all of a sudden now this just seems really placid and boring. And frankly, it kind of is, right? We've had an attempt to make a breakout here. We got above the March 25th high on that gap on May 12th, started pressing higher, got a little bit overbought here. The RSI and the S&P got up to 70. And so we naturally saw a little profit taking. And then any real headline that's not really much of a headline, apparently, it turns the market back down. And we find support back at the March 25th highs, right around the 200-day moving average, 100-day moving average. So many little indicators here, or big indicators here, that could have caused a real potential for a breakdown just over a week ago. And then, lo and behold, we bounce off of it and we start going back to the middle of the range again. And we've been basically closing right at this 10-day moving average, right around the 590 level every day. We attempt to go up when they say that, hey, you know what, we can't have tariffs anymore. And then within 24 hours, never mind, we're just going to leave them in place. And then we try to go down on Friday and then bounce back to unchanged. And yesterday actually started to show some signs of maybe a little bit more bullishness as we tested the high end of the range. We'll see if that can continue today. But right now, it's very much a range. 595 on SPY. If we get above that, starts to set up that potential to start talking about 613 again, push to a new high. And really, I think below 575 is the concern point. So I've actually been talking to a bunch of other traders about some of this stuff, and they're like, what do we think for here? And, for me, honestly, it's kind of this is that spot where I like buying the dip, but I'm not sure I want to buy the dip. So it's more not that I'm looking for the market to go up when we dip, but that we're probably not going to breach this support level barring real news. Now that real news could come any day with tariff negotiations breaking down. It could come from non-farm payrolls for an economic input on Friday. I think the biggest one's going to be if the tariff negotiations break down and things get worse between the US and China, which frankly I'm not expecting, but I've seen crazier things, especially in the last few months. So the big indicators for me would be basically buying on some weakness for a buy the dip type strategy, and that would be more spread based in the options, or a breakout that could lead to just a long outright call in a number of different names. That's the broad view, but right now while we're in this range and we're near the highs and we haven't broken out, I don't really want to be long the S&P here. I'd rather be long the S&P a little higher so that it shows that resistance got broken through, or I'd rather be betting against full liquidation a little bit lower when I can get a little bit more premium for, say, a put credit spread. And for those that aren't familiar with put credit spreads, I'm happy to answer questions about them, but I don't want to get too deep into the muck on this particular strategy today. Just generally speaking, right now, though, the market is very much range bound, like you said, and it creates a lot of chop and difficulty for traders at times. But that doesn't mean there's no opportunity. With the VIX getting low here, down to 18.5% and pressing down near that 17.25%, options are starting to get on the cheap side of what they've been for the last, 3-4 months. So with options getting cheaper, if I can find something that's moving, that can create a real opportunity for me. Before we get into an idea for this week, I do want to touch on SLB because, frankly, it just hasn't done much since last week.
Hmm.
And so wanted to give a kind of a perspective on what I'm looking at for this right now. And frankly, it looks more positioned for like a put credit spread based upon being near the lows of the range and holding that part of the range. The idea I was looking at was like a $34 call for June, and that's down a little bit here with the stock down a little bit since Tuesday. But when I also look back at my forecast toolbox for projected moves here in SLB, it still seems to think that, in the near term, we should have a bit of a bounce. So I'm not necessarily jumping out of this trade right now. This is not a spot where I've hit my stop, and I do think that there's some time here with the June option. Get back towards 35 and a quarter. That's just okay. That was the end of that trade for now. And oil prices have been firm. If you saw yesterday, it was up about $2. So, when we look at the oil prices firming, here I'll pull it up with USO, the ETF. You can see that we're testing the upper end of the range, and that generally should normally put some money flow into XLE, which would mean SLB is part of that, it being in the energy sector. I still believe in that trade. It just hasn't done much for this week. So,
Yeah. So
there are
let me slow you down for just a second, because you
yeah,
are just, man, you are
I'm
opening
running
up
here.
so many genius ideas here. So the first thing is we're looking at the broad market, and you got to remember that's an aggregate, right? So
Yeah.
the broad market is range locked. There are stocks that are just rallying like crazy, and there are stocks that are dropping like crazy. But when you put it all together in the S&P, it's 500, and it's weighted and all that good stuff. It's an aggregate. So it
Hmm.
doesn't mean that there aren't options, there are potential trades in there. It just
Right.
means that this is kind of the general direction that everything is going. It's always a great place to start because it gives you an idea. If most of the stocks are rising, then the chances of the stock that you're going to pick rising are greater. So that's why it's really good to start with that broad view. Then you jump into the trade that we were looking at last week. It still has time. It still has time to
Yeah.
play out. Uh, I don't. This is not by any means a mathematical calculation. But when I look at time decay, and this is where you're looking, I believe that had a 620 expiration on it. So that means
Yeah.
that contract's going to expire on the 20th of June. Um, I look at 2 weeks out. We're not quite there yet. When you get to 2 weeks
Hmm.
out, that's, take a rule of thumb. It is not absolute, but that's when you really got to pay attention. It doesn't tell
Yeah.
you what to do at that point, but it says, if you haven't done anything with that, if you're wishing for it to go in one direction or the other, or you're uh, already got profit and you want to lock it in, at 2 weeks is a really good time to start making some of those choices.
Yeah.
You can go farther out on that. That definitely, if that's your strategy, but just in general, that's a good strategy. All right. So now you're talking about
Yeah.
still having opportunity in the SLB trade, but then you go back and you jumped right in and you looked at the ETFs, and the ETFs are amazing because now you get like that same kind of aggregate general direction view of the sector. And
Hmm.
to your point, the SLB is a part of the oil sectors, the USOs and things like that. Again, gives you what are all the stocks in that sector doing, because that's going to give you a sense of the likelihood of direction for the stock you're looking at. I mean, uh, I think you don't realize sometimes how much experience goes into that, like 1 minute,
Yeah.
explanation of everything. And if somebody's just starting out, man, that can be like drinking from the fire hose. So I just
Yeah.
wanted to slow down there a little bit and break it down just a little. You can crawl into all those rabbit holes way deep. And it's worth it occasionally. You can't get lost in them, but
Yeah.
understanding what's going on. To your point, the put credit spread, just even that, just kind of we couldn't. You could do hour long
We can
webinar
do an
just on put
hour on
credit
put
spread.
credit spreads. Yeah.
Exactly. Yeah. So anyway, I know I interrupted you there, and
Yeah,
but
no worries.
I wanted to kind of just kind of boil that down a little bit, and I'm doing my best, man. I'm pedaling fast just to keep up with you. So
Yeah, yeah.
hopefully everybody else is keeping up as well. But love this stuff. So now what? Now you look at all this stuff. Now what do you do?
Yeah, so I think you touched on a couple of key points there that I want to like basically dive a little deeper on. Number one, the S&P being sideways doesn't mean that everything is sideways. It means it's a stock picker's market. Okay, we hear that phrase tossed around all the time. What's a stock picker's market? For me, a stock picker's market is a market where stocks are moving, but the market isn't.
Mhm.
So of those 500 names, maybe 250 are up, 250 are down, or in some minor fraction, but really it's, maybe 15 or 20 stocks are moving high or 15 or 20 stocks are moving lower, and the rest are kind of just chopping and not doing much. All right. So when that's a situation, it takes a deep dive to really start to evaluate a lot of different charts and try to find where that real trigger potentially could be. And the 2 weeks to options expiration, definitely right on. I mean, really, it's the last week to 2 weeks that the option decays when you're long. So when I'm looking at a long option strategy, if I don't see it moving right now, and we're in the last 2 weeks, I'm fighting against that theta. It's going to decay so rapidly over that last 2 weeks that it is not really worth holding for me. And if I think I believe in that trade still, it means I need to reevaluate my trade structure. So it doesn't mean I can't be long an SLB call, but June 20th may not be the right expiration once we're hitting Friday or Monday of next week. At that point, I may need to put a little bit more capital in if I want to stay in the trade by having a longer time to expiration. So exiting the June 20th, reevaluating maybe a July 18th option, giving myself a lot more time for the trade to play out if I still believe in it. And in this case, I think giving it a few more days certainly makes some sense. Maybe something with non-farm payrolls triggers the move. Maybe oil prices trigger the move. And when we go through that USO chart, back in May, here we go, when we had this run up in around May 13th, May 12th, that's when XLE was trading around, here we go, let's reload that chart, around $85, $86, and SLB, here we go, was trading around there we go, 36 and a quarter. And these are normally correlated, but right now the XLE sector and the individual names have been lagging that move. I think if oil prices stay high for a few more days, or at this point will continue rallying, that could trigger that interest and investment flow into the individual equities. People right now have gotten so burned trying to buy energy stocks on the expectation of a breakout that's not happening in oil, that maybe there's a little reluctance to get into that sector, but that confidence can build if there's a tailwind from higher oil prices, which right now seems to be where we're going. Now, that said, if oil starts to come back off, then that could be the indication to me of just saying, you know what, it's just not the right time for this. Doesn't mean never, but right now, not the right time for SLB. So there's a
And
little
so, and you've talked about this before too. You've said, if you look
yeah.
at the sector, you look at the kind of the ETFs and what they're made up of, you can find, like, you're looking at the broad sector and then different ETFs that represent that, but you can even look at the ETF, let's say XLE, what's it made up of? In both of those cases, the entire sector could be going in a direction. You're looking for a laggard that is going to kind of get
Mhm.
uh, rubber banded and caught up. It's going to get
Yeah.
pulled up to kind of correlate with the rest of that sector or that group of stocks, and those become the little diamonds in the rough. Those are really
Yeah.
the great opportunities. I know you've mentioned that in a handful of the sessions that we've done in the past, and it's just a really smart way to look for great trades in a range bound market.
Exactly. So it's all about trying to find those little inputs that can work with the market sideways. And so when there's other correlations and other things going up, and those should normally provide a tailwind, but the market hasn't quite caught up to it yet, then what's the trigger to get it to catch up? Well, it could just be somebody sitting there and pitching that idea to their investment team at a major investment house and saying, we need to start getting into energies. And then if people actually do go through that process, then SLB catches up. If oil prices fade, like I said, then maybe this doesn't work, but it seems limited on the downside in particular right now. If we get below this really around 33, 32.90 level, it tells me that, you know what, we're not there yet. And I got to find a different trade for now because I don't want to fight against a trade. I mean, when the current isn't moving, you're doing a lot of paddling, like you mentioned, right? We're sitting there trying to find the reason. But at the end of the day, I don't move SLB. You don't move SLB. Nobody really moves SLB unless you've got much more money invested in the market and you're buying those names. And when people start buying those names and they're investing millions or tens of millions or hundreds of millions of dollars into these ideas, that's when the market starts to move and the current is there and I can sit back and enjoy the ride. Otherwise, I'm just fighting against the chop, waiting for something to happen that may just not come to fruition for more time than what I've got on my options. So, right now it's a little bit of a using some mental capital to try to figure this thing out and decide whether or not it's worth holding on to. But once I've done that evaluation and say, okay, I think it's worth holding on to, I've decided that 32.90 seems like a level that if we get below, then my thesis is dead. If oil prices start to fall off, my thesis is dead. All right, now I've got my trigger points for an exit. I got my price target. I'm going to stop wasting too much of my mental capital on it and try to look for other opportunities out there, because at the end of the day, if there's another opportunity that looks better than SLB, I may want to just exit the SLB trade, free up the capital, and execute a better trade out there that really does have a higher probability of success. Because I could probably force like 70 different trades every single day, but they're not the best use of capital.
Right. Yeah. So again, just a handful of things here. First off, ladies and gentlemen, this is what you get when you're talking to a former market maker. And this is somebody who knows how this stuff plays out. The market is made up of human beings. Even the algorithms are programmed by human beings. Even the AI that uses the algorithms to learn is programmed by human beings. It all starts with us, right? So here's Keith talking about from his experience of being in a trading room where they have people making markets and setting this stuff up. And you're talking about what will move the price, what will actually be the impact and move that price, right? So it could, it's not me going out there and buying a couple contracts or something like that, or buying a couple shares of this thing. It is a fund or some big, institution putting a lot of money in it. They see something happen that puts them a lot, and that's what's going to move that market. And so he's talking about that very beginning of that movement, where it happens as an idea or somebody talking about it. This is kind of insight you just can't get from anywhere else, And the fact that it's all humans, it's driven by some anticipation, some idea, some emotion, a little bit of emotion in there, even though everybody tries to turn it off. There's always some emotion in there. So really great to kind of boil this down to the very kind of nucleus of where it all starts. And that's incredibly helpful, Keith. Thank you.
Yeah, absolutely. Yeah. So anyway, we've kind of talked a bit about the SLB idea, and I think that, for me right now, the idea is it's close to a level that it may not be worth holding any longer. We get a little lower. Okay, move on, find the other trade. And that's actually a big thing for traders, is being willing to just say, you know what, it's not working right now. I don't want to waste my time evaluating this anymore this morning. I want to look at something that's got a little more potential. And actually, one of the things that I'm looking at right now is a new idea is moving right now, and it started moving yesterday. And that's from steel tariffs. And that was Nucor. So Nucor yesterday ran up 10%. Now, this can be a very daunting setup for a lot of people. We see a 10% move, and all of a sudden people say, well, how could I possibly buy it? It's 10% higher. And other people say, well, I don't want to sell it because clearly there's a bullish input. And that's the key to me. There's a bullish input. The market priced that in. Is there a chance for continuation here to further upside? And if so, how does that look? So I'm not necessarily looking to say, okay, well, I'm fading this. There's a new input. So this price should be higher. Should the price be higher than it is right now? That's what I don't know, but it's moving, so people have their eyes on it now. They start saying, well, should it actually be higher than 120? Should it actually be 130? Should it be 135? People are looking. People are evaluating. And what we did yesterday was really key. We tried a price above the May 2nd high, which was 124. That should have provided some resistance. We opened right there, went above it, and then faded back below. Right now, it looks like a false breakout. And then that would mean, okay, you know what? That was it. This is the end of the move. But if this next move starts pushing us back above 124, then all this pullback was just profit taking. And then there are other people out there that say, gosh, I don't want to take profits after that first 10% because I think there's another 15 or 20%, maybe up to 140, maybe higher, given the new inputs. So how do I look for that setup? Well, usually in this sort of scenario, I look for that money flow to start to return. So again, that money flow returning means prices go back up. And lack of sellers allows it to go back up maybe rapidly. And if we get above 124, all of this trading action from really, we'll call it April 2nd through yesterday, is now below current prices. So if people aren't selling, it means those that wanted to sell after buying for the last 2 months have done so. So now who's the next seller? Shouldn't be anybody really in this range. It should be people that are in this range. And people don't like to sell things for break evens usually. They're looking for a little bit of profit. So that allows for a little bit in potential of 130, 135, maybe even 140 on the upside. So I said, okay, well, looking at all this, it looks natural that I want to be long, but not yet. So how do I get in? Well, given all that, I go back to my forecast toolbox again, just to try to give me some sort of idea of what AI has normally seen happen in scenarios like this and predicts to occur in the middle or in the near future. Now, when I look at this, it says today's trend is expected to be bearish. Makes some sense. We had a little bit of a pullback yesterday, but in the near future, this is today, expected maybe a little pullback, and then a pop. So if I start seeing this happen the same way, it aligns with my model and tells me that the model sees kind of the same thing that I do, that there might be a little bit more profit taking, but if we get above these previous highs from mid-May, all of a sudden there's a lot of upside here. And really, it could be tomorrow, it could be the next day, that I'm looking at potentially buying an outright call or a longer term call vertical, but let's stick with the outright call to keep it simple, and looking for a price move in the next couple weeks up into the high 130s. There's a good potential move here as we're trading near that inflection point for potential upside. And when I go to NUE options, if we have a chance to say go to 135, although 125 calls in that scenario are worth at least $10, because if they're $10 in the money, they have to be worth at least $10. The stock price minus the strike price is the minimum value of an option. Now, it should be worth a bit more because, frankly, the 110s are about $10 in the money, and those are worth 13.5 right now because there's still that extrinsic value, that defined risk value, that leverage value. So people have to pay a premium for the options in addition to how far they are in the money. And NUE looks like that's a great setup then, because not only could it go from 4.5 to 10, it could go much higher if the move happens in the near future the way that I'm envisioning here. So I look at NUE as this really nice setup where it's moving now, people are interested in it, people are engaged, and it could be one of those stocks that has, even on a little dip, it may create a better entry point for me, but I do need to wait for prices to start going back up before I get in. I don't want to be buying it as it's coming down, because if I'm buying as it's coming down, I don't know that there's a buyer yet. I'm not the first buyer. I'm not the first guy to jump in and say, I want to buy this stock on the way down, because I'm not getting in front of that steamroller. I want to start buying when everybody else is buying and have shifted the momentum back to the upside, especially given that potential upside move of maybe 10% from here in the near future. But I want to see that first 1-2% start to come through before I'm willing to say, okay, I believe that the market has really decided that this has more upside to go.
Yeah. Wow, that's really amazing. What was the expiration you were looking at on that one?
So this is July 18th, and I'm looking at the 125 calls, and this seems like it's a pretty good value at $4.50 right now. And by the time I get in, these would probably be closer to $6. They're going to be a little higher because I'm waiting for the prices to be higher and seeing the market
Second mouse
a
gets
little
the
bit
cheese,
lower.
right?
Yeah, exactly.
Yeah.
I don't want to be the first one. The first mouse, yeah, he doesn't make it, but
Whack.
that second mouse gets
Yeah,
the
right.
cheese. And then we get to find the flow when it's occurring and waiting for that point. And I like talking about ideas like this, when we're chatting here, because I know some people watch this on a replay and they're like, oh, well, that idea was perfect live, which great if you can join us live, but not everybody can. This is one that's still in development. And after the move yesterday, of course, everybody wishes that they were in on Friday on the close and took that 10% win, but that's not the nature of the chart, and that's not the nature of the trade here. That had a fundamental input that caused the move. If people knew it was coming, we wouldn't have been trading at 6-month lows on Friday afternoon. But now that it's out there and people digest the information and evaluate how it impacts the long-term growth prospects of NUE, if they start investing, I want to be part of that crew that's investing with them and following that concept. I mean, really what we're all doing is trying to follow what the big money is doing every time we add into a trade, right? We just have to
That's
identify it.
exactly it. Yeah. Yeah, no, spot on, man. Really. And I love the idea of being cautious, watching for that confirmation. And also just great to point out to people that a lot of times you can just, all these things are not like act immediately kind of
Hmm.
opportunities, that these are things to put on your radar to keep an eye on and keep looking at. There's so much again in all of this stuff. Love the fact that we talked about, I think, before we started a little bit, the cadence of these presentations makes it nice because it's more aligned with what actual traders are going through. You're in this over and over and over again. You're in there every day. You're looking for trades. You're trying to manage trades. Some go good, some go bad. You got to have the toolbox that allows you to do all of the above. So, I think in this one presentation, we touched on so many different
Yeah.
aspects of what it's like to be a real trader
Yeah,
and to give
absolutely.
some insight from a pro. So that's why these things are just out of this world. I know we mentioned also that you got a couple events coming up. We're going to put some
Yeah.
links in the email about those so that everybody can access them. Those are deeper dives. Talking about things like put credit spreads and all that. You could spend a full webinar just doing that. Well, these are some of those
Yeah.
full webinars. These is where you kind of get into the nuts and bolts of things and help people understand how to add them to their arsenal of choices they have when they're looking for trades. So really valuable. Definitely check out those events, that event schedule. We'll put links to the tools that you use as well. I know that we've had a lot of people inquire about that. So really helpful to make that available to everybody. And yeah, we'll get that all out to everyone. Keith, this is amazing.
Absolutely.
Thank you so much. I know we're getting right up to the market open and everybody's anxious to probably get in and see what's going to happen, including you and me. So thank you so much for your time today. Really, really appreciate you carving out the time to talk with us.
Absolutely. Thanks again, John.
Yeah.